the labor market is out of balance. If you want a job, it's easy to find one. If you want a worker, it's hard to find one. And that's causing, of course, employers to bid up wages. But the striking fact, and I don't think we don't regularly pay attention to this, but it's really important to pay attention to, is despite nominal wage growth rising rapidly, real wages have been flat and in some cases falling, depending on which group you're looking at. So for the average person out there working, they're saying, well, I'm not even keeping up. I'm on a treadmill that just keeps making me fall behind, even though I'm getting good nominal wage gains. And so the way to get those two things back in balance is to bring the labor market back in balance. So you'll see in the projections for the SEP that the unemployment rate for 2023 and 2024 went up. The projections where it went up. And some would push back on us and say, we can just reduce vacancies in the labor market and we can get there less costly. But I just don't think so. My own projection is very similar to the SEP median, that we're going to have to go into the mid fours or even slightly higher on unemployment to get the sort of relief in the unemployment in the labor market we need to bring things back in balance. And the final thing I'll say about that is, wage growth right now is 4.5 to 5, depending on which series you're looking at and what sector you're looking at. And really, we need it to be 3.5 to 4 if we're going to be in that sustainable place. But the wage growth itself is not the problem. The problem is the labor market is out of balance. And that's causing the effects we see, just like it caused, things out of balance caused price inflation in the goods sector or the housing sector.